Good morning, Campbell McCreary here, Amvest Capital. Welcome to the Amvest Capital Inc. live webinar with Variscan Mines. Variscan trades on the ASX as VAR. Hope you'll enjoy today's program. It will be available in replay, on-demand replay, about an hour after we wrap up at amvestcapital.com/webinars. We really love questions, so please find your way to the question pane and message in the questions, and we'll ask them in real time. And this, of course, is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. Very important, this call is for informational purposes only. Please read this disclaimer carefully. Very pleased to have with us today Stuart Dixon. Stuart, if you want to turn on your webcam and we'll get started. He's managing director and CEO and has significant corporate and commercial experience across natural resources and financial services sectors. He was previously he was managing director and head of metals and mining at Cantor Fitzgerald Europe in London, and prior to that, he was in the British Army. So again, following the presentation, we'll be asking questions from coming from Amvest and from you, the larger listening audience. So good day, Stuart. Present away. I'll give you the floor.
Hi, Campbell, and good morning, good afternoon to everybody in the various different time zones that have tuned in to listen to this. So thank you for your attention in advance. This is actually the third webinar that Variscan, or I and Variscan, have done with Amvest, and we're delighted to be back. And we're delighted to be back to really tell you that we are here to tell you about the delivery that we have done on the things that we told you about previously. And principally, that delivery has manifested itself through the drill bit. So we're going to be telling you about some really exciting drill results at the San Jose mine in Cantabria, northern Spain. So we just flick on the slides through the disclaimer, which I'm sure is all sophisticated and accredited investors you're aware of. And then so that's some of our team in Cantabria, and then we're going to focus very much on that as our lead project. On the next slide, we will give you a bit of an overview, and you can see where the mines that we operate, that we're working around in northern Spain. So Cantabria is northern Spain. You see the site there marked Navales with our little logo there, right next to the former Zinc mine, and this is located in the Basque Cantabrian Basin, which is prolific and a proven zinc mining jurisdiction. Zinc, some 9K from our assets, is a world-class asset, former Xstrata asset, 62 million tons at just under 9% zinc. So we've got the right address, it's got the right heritage, and we've also got the right infrastructure. We are very close to the regional capital, Santander. That's less than 30 minutes by sealed roads. We're right next to Torrelavega, which is in between our mine sites and also Zinc. That has its own mining school there. So we have a talent pool, we have a knowledge center right on our doorstep. And we also have routes to market right on our doorstep. As you can see, we're very close, 80 to 90K away from the Asturiana smelter, which is operated by Glencore. And that's one of the world's largest smelters. Why is that interesting? It's really interesting for one or two reasons, which is currently most of its feed, we understand, comes from Australia and Alaska. And that really is inconsistent with the direction that the European Union is taking. Certainly under the EU Green Deal, it's very much looking to make its supply chains much more robust, much more ethically sensitive, much more environmentally sound. And so we see potentially a source of high-grade zinc coming from our mine into a smelter, delivering metal into Europe in a really ESG-friendly way as being one of our competitive advantages. And of course, all of this means that our CapEx and our infrastructure costs are going to be so much lower. So we've got airports, ports, roads, smelters, mining school. What more could you ask for? And of course, what we're going to tell you about is the ore bodies and projects which we are developing to be able to take advantage of all of that. We have got two objectives on the Novalis project. One is the discovery and establishment of resources at the San Jose mine to facilitate early stage production. And the second is further discoveries of substantial regional resources around that in the adjacent and contiguous license package. We do have a second project, Mark Guarajares, there on the towards the center of Spain. It's about 80 km south of Madrid. And again, that's a really interesting project because it shares many of the same hallmarks: former producing mine, former underground mine, so therefore, much more palatable in a developed economy setting. It's a zinc-rich polymetallic deposit. It has a non-JORC compliant resource from Encima of 5 to 10 million tons, 10% zinc, 0.3% lead, and 130 grams per ton silver. And that's something that we're going to be telling folks more about in the second half of this year, as we've been very much focused up in the north in Cantabria. So let's tell you a little bit more about that. This is why we get excited, and this is why I get excited every day about leading this company with this project, because we have thick, high-grade zinc-lead drilling results, which proves the existence of significant lenses of mineralization untapped in a former mine which we can access. And that's really what we've been focused in on from the drill results we produced in May, and then latterly produced some 36 hours ago. So this is right hot off the press stuff. And when I say thick, high grade, what do I mean? I mean, we're well into the double digits on all of this. So we had 17 meters at 12.5%, 23 meters at 11.5% zinc. So these stand up by any stretch across any drill project would be notable. And these are the other characteristics which I've talked about. It's an NBT deposit. That's well understood. It makes the geology well known. It's a vertically stacked series of lenses. They're not uniform. Nature has been had a sense of humor. It does pinch and swell, but what it has paid us back in is when we're in the ore, it's really high grade and really easy to keep working through. So that's easy. That's understood. We then have a really permissive above ground environment where we've got a regional government which is hugely supportive. And some of you will have heard me talk about this previously, that Spain, from its historical legacy, you really need to look at on a region by region basis, because there's a significant amount of power devolved to the regions, and natural resources is one of those powers which is devolved. In Cantabria, President Revilla has publicly stated a number of times his support for the exploration and mining industries. He's backed that up with policy. He changed the land use legislation some years ago, which enabled us to pick up these licenses, or predecessor company to pick up these licenses. And we see that support manifested in our interactions with the government, particularly at the highest levels. And just of note, and I know that many of you will be following the Cantabrian press, but you will see Variscan referred to in the parliament as being an example of how a foreign explorer can come in, act in a really responsible way, and add value locally. And that's been cited within the last quarter about us as how we refer to. So don't take my word for it. Take it from the local senior decision makers and influencers. And some of those points we've really talked about before. So we'll just move on into a little bit more of an overview of the project from a mineralization point of view. So some of you may have been following the story, would have seen we've done a hell of a lot of really boring work, which doesn't really get much credit or kudos from the markets, but it's absolutely vital to having really effective drill programs, really effective exploration programs, and delivering results. So the work we've been doing over the last 18 months or so is now beginning to pay dividends in those drill results. So what have we done? We put together a camp scale opportunity, and that's backed by data. So we've got 88,000 meters worth of historic drilling, which we've compiled. That gives us a huge head start in being able to define our drill targets accurately and efficiently. That saves time and that saves money. So when you look at the drilling intersections which we published, you'll see they're actually very efficient holes, and that we're not drilling through huge amounts of overburden, because we're able to locate where we want to drill, do it surgically, and that means every meter is paying us back really effectively. So we're making every dollar count and getting bang for our buck. But it's also delineated, as you can see, a camp scale opportunity to have 9K of mineralized trend, and we're only talking about, you'll see the yellow dot there with the mine symbol, about 2/3 of the way up the Navales trend. We're only been focused in on that, and really the opportunity for us in H2 of this year and moving into H1 next year, or Q1, Q2 next year, is really beginning to drill test these wider mineralization trends to prove up what we believe could be a hub and spoke model. So San Jose, the mine on the Navales trend, would really be the hub. We've got land use access agreements already in place. We've got road, we've got power, we've got buildings, we've got Wi-Fi. We're ready to go. So that will be the hub, and we'll then look to develop these satellite deposits, these very encouraging mineralization trends, these former workings, and then some enormously positive geochem signatures over this area. So we're good to go, camp scale, in a proven mining jurisdiction. So let's deep dive now into the San Jose mine. And actually, deep dive is the wrong word. If you just hold back on that image, just go back, because it does tell a story. Some of the keener eyes will be familiar with the rock types, but for those that are not, this is a carbonate-hosted zinc lead deposit, and that's attractive for a number of different reasons. One, you can really see quite clearly some of the mineralization, but two, when we come to think about processing, beneficiation, and routes to market, or having a product to sell to market, a carbonate-hosted deposit is really interesting because you have low cost of crushing and grinding. So limestone, dolomites, it's easy to crush. You only need to coarse grind because of the large grain size of the salarite and galena, which host the lead and the zinc. Typically, you only need two stages of froth rotation as well, so it makes it more efficient, both from a cost and time process, to produce your concentrate. And we know a lot of that today, but we also know a lot of that because we have the historic processing and concentration data for when it was in production. So what you see there is really interesting and illustrative, but it also shows you a really interesting phenomenon with this asset, which is the experience of seeing a large, high-grade bags of ore, bolsasses, and some of you will have heard me talk about that, and that's one of them. To give you an idea of scale, that's two people there with their PPE on. So you really can get very big, high-grade areas, and that's what we're delineating. That's some of our experiences with the drill bit thus far, and you'll hear more about that as we go on. So if we just flick on to the next slide, really what I want to just carry on very briefly is this high-level geology. So I talked about being in a limestone dolomitic setting, or the mineralization being in a dolomitic setting. And what do I mean by that? Well, that is the blue areas, the light blue, rather fluorescent blue almost, that you can see where the mine is and then where our tenement package is. Now cast your eye where the Rio Sin mine is by Torre la Vega, and you will see it's exactly the same lithology as we have at San Jose and over our license package. So broad takeaway is we're in the same geology as a former world-class MVT mine that closed in 2003. So we can only expect world-class, high-quality results as well, and that's the bar that we set ourselves. So what did San Jose do? Why is San Jose even of any interest? So the next slide shows some production numbers we've been able to assemble from going through the archives and the records. It's not always exact, but you will see decent head grades, an average of 6 to 7%, going up as high as 9, lead grades of 3. So that's impressive even by today's standard, and I'll show you why in a minute. But of the time, we believe that probably they did suffer a lot of dilution because their technology their understanding of the mine deposit was nowhere near as good as we have today, and not as advanced with technology and technique. So we would be able to come in, be much more surgical to take advantage of these double-digit intersections and mineralized lenses which we are seeing today. It's just worth also making a sidebar note, and some of you will have seen I've done a chart on this previously, is when you look at the price environment that this mine operated in, it was around $1,300 per ton of zinc in 1997, which is when San Jose closed, and it was actually low, it's sub 900 when Variscan closed in 2003. We're now trading at $3,000, and what we all believe to be the start of we're now well underway in another super cycle, and I'll talk about the outlook for zinc a bit later. So what we do know is this mine operated with old-fashioned techniques, suffering huge dilution, lack of technology and processing, and still was profitable at prices 2 to 3 times, and in some cases 4 times lower than we see today, and what we see as being a rising price environment. So we believe that sets us up very favorably for the future. So what does this look like then if we put it in today's context? And on the next slide, you'll see a chart where we've shown where San Jose would sit if it was in operations today, based on its historical performance. And as you can see, it sits very favorably with some of the world's most well-known and largest mines in the world currently in production. So if we started San Jose and did exactly as the old timers did in the late 90s, this is where we would sit. And we believe that makes us on a grade basis, certainly not on a tonnage basis, but on a grade basis. And many of you will be familiar with the old saying, grade is king. And it absolutely is. It's a truism for a reason. And in this instance, it is for twofold. One, it allows you to be much more cost effective in your operation. You don't need to shift as much non-mineralized rock to extract the metal. But also it means that you do not need to define so much of a large tonnage. You can get away with a smaller tonnage because you have the high content of the metal in the rock. So high grade sits comparably with today's peers and is well set up for a restart. And as you'll see on the next slide, I did mention it earlier about some of the infrastructure on that we have in situ. And there is a little out of date drone shot that we took. And you can see there we have all the constituent parts in place already. So we've refurbed those buildings, they're all up and ready, the workshop's operational, the core shack's operational, the office is operational with all the things that you would expect to have in a first world jurisdiction. We have road access, we have all the amenities of the small little town of Navales, Alphonse close by. The town hall is within walking distance, so we go and see the mayor if we have any issues, or he pops down to see us. His parents used to work at the mine. So there's huge amounts of local buy-in, huge amounts of local interest. But much more importantly, this will allow us to have a lower capex restart. The extensive underground mine development is a huge cost saving and really ESG friendly, because we don't need to excavate effectively that rock to do which has already been done for us. And it means our discovery threshold for what we need to find in terms of mineralization is actually lower, because you don't need this huge tonnage to support a huge capex requirement, which is typically required in a new project. So when you layer all of this in place, and then the fact that we have a granted mining license over 18.5 square kilometers of the mine area, you can see that we're really well positioned to think about the future development. So then let's look at what we've been doing to prove up that ore body to look at future development scenarios. And on the next slide, you'll see the output of a lot of the work that we did before drilling. And it may look like a lot of colors and lines to a lot of folk, but for those with a keen eye, they will realize that this is the historical drilling that we were able to compile. And actually, this isn't the full 88,000 meters. This is probably less than half of that in and around the center of the mine. We then did the first 3D laser survey of any mine in Cantabria, last summer. And we then layered on the results of that against the historical drilling. And what it did is it very clearly showed us a number of things. One is, most importantly, there is still remnant ore in this mine based on the historical drilling. So we knew kind of where to go to look. We then knew that the workings identified, and you can see them, a series of north-south parallel trends, which then gave us some very strong clues around how the structures, the faulting, and how strata-bound this asset actually is. So we then used all of that to compile and design our drill program, which I'm going to tell you about now. So this is the rig that we've used, very small, light portable rig, and it's meant that we could get into those places of the mine where we really wanted to look at extensions and be agile in our approach. And what that drill rig has delivered is over on the next slide with our first set of results that we published on the 25th of May. Which we believe are eye-catching by any measure. It was predominantly focused on discovering the lower lens of La Caseta. And what do I mean by that? What do I mean by a lower lens? You need to think of this mine as a tunnel going into the side of a hill. And that main gallery effectively stays at the same elevation all the way through, dips ever so slightly. And then what they did is they drilled up into the hillside. And so when you see the future sections, you'll see most of the drilling goes vertically up rather than vertically down. And again, because we were able to compile that data, it showed a glaring opportunity to us, which was, hang on a minute, why is there no drilling beneath this main gallery? So we speak to some of the old timers in the village. We've got some of the former workers on our team now in site. And we said, why were you guys doing this? And they said, basically, well, we were just worried about water, and we didn't really know how to handle the water table, and we didn't really want to make life difficult for us. So we know that mining techniques and mining technology has evolved substantially since then, and you're seeing hugely deep mines dealing with these types of issues. So we felt very comfortable that if we found ore, that there would be a technical solution to extract it. So we tested it, and these are the results that came back in the first instance. So discovery of a lens beneath the La Caseta trend. But then we went, well, hang on a minute, that's even more significant because there's none of this downward drilling throughout the remainder of the mine. So when you take the fact that the mine is about 2.5 kilometers in length, 1.5 kilometers in width, and then you go, okay, well, none of that's been drill tested beneath the main gallery. And when we've drill tested it, we found hugely interesting intersections. If that's replicated throughout the rest of the mine, what you have there is considerable potential for scale and tonnage. And that's why we get really excited about the results of these drill programs. So overleaf, I'm going to show you in plan view the La Caseta trend and how we've evolved on from what you saw earlier, that very early laser survey of the workings and the historical drilling. We've been able to take that forward and drill on those trends. So we drilled the first two trends being La Caseta and then 168, 177 trend, which runs parallel to it. And so most of the drilling that was reported there was at the northern end of La Caseta, where we found those wonderful holes. And so then what we've done is we plotted that in long section to show you really the opportunity which we've then followed up. So on the next slide, you'll see the section, which is there. And the two drill holes at the right-hand edge of the slide going down were the discovery holes. So nearly 17 meters at 12.5% and 15.5 meters at just over 3%. So we were like, wow, okay, that's there. So what happens if we continue to drill this to the south, which are the drill holes you can see going down? We also did some drilling vertically up as well, and you can see that that has also been positive in mineralization as well. So we said, okay, well, what do these results actually mean? And how significant are they? So on the next slide, you'll see we plotted our intersection, so width times grade, very simply, it's a measure, I'm not saying there aren't other measures, against other recently reported zinc drilling results on the ASX. The Variscan results are in red, other companies are in blue, and other well-known companies which have had multiple, much noise and excitement and re-rating. And as you can see, I used the phrase earlier, grade is king, and that's validated throughout this chart. But it's also validated by saying, okay, we also have multiple occurrences of high grade. These are not just one-offs. And so we then said, okay, how do we take this story forward and see what else is there? So on the next slide, which is the next set of results we just reported in the last 24, 48 hours, you'll see we did it again. Lightning strikes twice, or it wasn't a one-off, is the better way of putting it. And what that has then demonstrated, and you'll see much more clearly on the next slide, sorry, the next two slides rather, is we started to drill away from that northern discovery, further south, and then have had multiple positive, thick, high-grade intersections towards the south. And now that discovery is now 400 meters long. And you'll see that on the long section presented overleaf, which is there. So the areas in pink were in green on the first slide, and that's literally just to distinguish between the two charts. And all of these were unknown in those going vertically down, or inclined down, better way of putting it. So that's why we're excited. We think that there's much more potential. This remains open. We've validated our thesis, and really what do we want to do next? It's about continuing that drill program, reinforcing success. We can see pockets of mineralization below and above gallery levels, and we're working up, or will be working up, a much more detailed mineralized model for the ore body or for the mine as we go forward. So what can you expect to see from us? On the next slide, you'll see essentially our high-level catalysts, which is no surprise, is based around drilling. So we have 30 assays still in the lab, which will mark the cessation of the current drill program. And they have not only focused at the end of La Caseta, but also to the southwest of the mine, and also looking at another trend to the north, center north of the mine. So where we tested, again, some of these parallel structures. So you can expect some drilling results shortly. We've also been doing structural work, which again, isn't terribly exciting from a market's point of view, but hugely valuable as an enabler for our future drilling success. And we'll be reporting on the structural analysis which we've done of the ore body, which will inform us for refining our next drill program, which is ongoing, which is ongoing right now. So we expect to do follow-up underground drilling. We expect to do selected step-out surface drilling around the mine to start to test some of those positive geochemical anomalies and also historical positive surface drill holes. And all of that leads into a refined and hopefully enlarged mineralized model, which we hope to report. Now, Buena Ora is the surrounding tenement package of about 50 square Ks. And we've already applied for our surface drilling permits for that, and that's well in the process of government approvals. And we hope to be drilling on that package as soon as possible. And on the right-hand side, that image is the reported drill targets which we set out. And I'm hugely excited to be able to get the rigs down onto those areas. As you can see, geochem with those big red and orange bright contours sticking out at you. You can see that merits drill testing. That's Magdalena and Sinfarosa. Has small amounts of workings, and literally when I mean small, they are tiny. And then that's supported by really interesting historical drill holes. So we're excited to get the drill rig working on there. We'd also like to look at some of the underground workings, because what this process has shown is actually it's really efficient to get the drill rig in, start to drill test it. You can see much more in a 3D space and get much more bang for your buck, as I said earlier. And then we've got some we've managed to capture some historic seismic survey data, which was taken over the Basque Cantabrian region, largely because actually some of the conditions which helped to make a favorable zinc deposit actually helped to make a favorable oil and gas deposit. So we've been able to get some of that seismic data that was done for oil and gas purposes, and we're in the process of repurposing that, reprocessing it, and then obviously getting the interpretation done on that, but that's going to take a little bit of time. And then don't forget our other really high quality project in the south. We want to get folks down onto that to map, do some geochemical sampling, and ultimately get ready to drill test that as soon as we can. So it's an action-packed future for the company. And I think I'll just take a pause there. Thank you for your time and attention. So probably a lot to digest, and I'd be welcome to field any questions or queries that you may have.
Excellent, thank you. Got a few already, but please, everyone, send in your questions in the question pane there, and we'll ask them. Grade looks good, but what kind of tonnage can you define?
It's a great question, and it's something that, that ultimately the drill bit will determine. We do not have a historical tonnage number on the mine, and nor do we have a target at this stage. And I think I'm asked very regularly about how close are we to getting a JORC report or some kind of mineral resource estimate. And at the moment, where we feel is that any resource would not do it justice at this moment. We think we've got another 6 to 12 months of drilling to really come out with a resource that's ultra robust and starts to do the scale of this project some justice. So you can expect that in due course, but we're a little premature for a tonnage number.
How much might it be to build a new mill and crushing capacity?
Bit of a function of how big's the resource, but that's kind of a rather smart-ass response. The honest answer is we're looking at multiple development scenarios already at a very early stage, and what we know is that we've got choices to make around how we develop and process these this ore. One of the really interesting things I'm looking at the moment, certainly from an ESG and a cost point of view, is actually a modular mobile processing unit, and we're seeing a hell of a lot of advancement of technologies in that. And it has one of the other critical advantages, because it's effectively a temporary structure. You don't end up getting stuck in planning and building control issues as well. So we're looking at all sorts, ranging from the small with a ramp up potential to something quite large, and that will be driven by our ultimate definition of the resource size.
What are the average grades and interval lengths for the mineralized intercepts from the recent drilling in San Jose?
I think we presented them in terms of, if you take an average of absolutely everything that we drilled, I mean everything, and nobody ever presents this number, all the barren holes, all the intersections where you've got voids, absolutely everything, you kitchen sink it, the average grade is 4%, which is unheard of.
When was the last time the San Jose region produced zinc?
So from a mining perspective, it was 1997 when this, 2003 when Rio Sin closed. Obviously, from a production of zinc, it's actually still ongoing. So that's just imported feed. So that's why our projects are really interesting, because effectively they would be integrated as they once were. I mean, all of this was owned by Asturiana and then Xstrata. So effectively, we're putting the band back together.
Okay, thank you. Stu?
Yeah, thanks for the presentation, Stuart. You know, there's been a bit of buzz back in the zinc market, especially in the ASX, with like Rumble Resources discovery. You know, do you think that excitement's helped, you know, added to the kind of share price success recently as well, given your stellar grades?
Yeah, I mean, look, I want to see everybody do well. I don't see this as all being in competition. I think, you know, and zinc's one of those funny metals which is often overlooked as well, and it's never been a mainstream kind of like a copper or a gold or whatever for various different reasons. But it's still the world's fourth largest, most used metal. I mean, it's actually essential to everything that we do on a daily basis. So I always think that's a little unfair. Rumble's definitely helped draw the attention back onto zinc. Rumble's numbers are in that chart, which I published there. So that will tell you why we think these grades really are exciting. And I think that's why the market did get excited. And, frankly, we've made certain investors quite a lot of money. And I've got no problem with them realizing gains and profit taking along that journey. That's ultimately what I'm here to do, which is to build value for investors on a journey. And it's never a straight line, but it's helpful to have other zinc companies doing well. And so I wish them well.
Yeah. And have you kind of thought about like the stacked lenses and how a mine plan might work, or how you'd kind of try and minimize dilution?
Well, that's part of what we're doing, really. Is just, frankly, nobody has a full understanding of what the picture of those lenses look like. So we're finding these new lenses now all the time. As we continue to drill, that picture becomes much more vivid and it will become much more detailed, and we can see how they mined it previously, because you can walk along the stopes, you can see the ore passes, you can get a feel for it. And obviously we also, some of you may have seen it, we published a video of actually how they mined it. And we've got one of the former guys who was in that video, actually, who's a paid up full-time employee of Variscan. So we've got some pretty good idea of how they mined it. In terms of modern mining techniques, I think to some extent that'll be determined by actually the extent of the size of those lenses, which we do ultimately define and when they run out. But I think it's still always going to be very surgical, small scale, very focused, and try and stay in the grade, because it's hugely payable.
And then you're in London, I know, and have you had travel recently due to COVID? There were some restrictions loosened, weren't there?
Yes, so we've taken a very cautious approach to COVID, and the health of our staff has been uppermost in my mind. We have the benefit of 100% local staff, i.e. they're all Spanish residents, so we haven't had fly in, fly out issues. In fact, I'm the weak link in the UK with the restrictions that we've had. And both Spain and the UK, frankly, have had a tough 12-18 months. That we're coming out of that, vaccinations are coming through. And one of the good things about Cantabria is it actually had one of the lowest, I think it was actually the second or third lowest by region of case counts of COVID. And because we're in a reasonably rural area, we just had the benefit of low incidence. But that meant, we still had to be underground with face masks. We still had all those protocols in place, and travel is easing up. And actually, as of today, just got my next trip planned to Spain. So, we can operate. It's not a problem.
Right. And just if you touch on permitting Spain, for exploration, and then, for mining separately. And what permits in place,
I think this is where Spain has had some unfortunate case studies. And I can think of one or two, and but when you look at most developed countries, while you have the benefit of all the being in a developed economy and all the goodies that brings in terms of making life easier for you, it also brings some complexity to the development of mine. And this is why I said you need to look at it on a really focus on a regional basis. There is the political will. There's a political legal framework for it to be changed for the better. We have a granted mining license. They're all big ticks in the box, which not every other province or country can say, or project can say. So we still will have to act responsibly. We'll still have to do the right thing. I'm sure there will be people who don't always share the same vision as us for having mining restarts, and I respect that, but we'll work with them to be a responsible responsible miner developer. I mean, it's going to happen. It happens in Australia, it happens in the US. You know, the environmental lobby is very powerful, and I have no problem with Variscan being challenged to be a good operator, because it you know, we will be. So we'll get it. We'll get it right.
Yep, right. Thanks for that. I'll pass it on to Adam.
Oh, thank you. Yeah, the just to follow on to the previous question about permitting, you know, I do recall, was it the Astur had the gold mine on the coast that was basically rejected, and I think was rejected. A couple different plans were rejected, and so what can you talk about some permitting success stories, you know, recently in Spain?
Very good question. You only ever hear about the bad news, but I mean, I would draw a couple of, who do I look at as being really good operators? Well, and being able to operate. I would look at someone like Matsa, the Trafigura JV. That's a really successful mine, been operating now very well. I would look at some of the First Quantum, Lundin assets. You know, you have big, well-known, proven mining operators who've been able to navigate the permitting systems critically in other, more, how should I put it, particular regions not so familiar with mining around the permitting side. So, you know, you have a track record of some of the best operators, mining operators in Spain with permitting success. So it's easy for markets and some commentators to focus on the horror stories, and I've seen, you know, various other companies in other places not quite have the same success as those, but it can be done. And that's why I take comfort that it can be done on a national level, and on our regional level, we're seeming to be getting all the right mood, music, and actions coming out. So looking at it on a balanced view would be what I would say.
And then going back to your comments earlier about you're expecting to be able to put together a maiden resource, you know, with 6 to 12 months of drilling. Can you go over your drilling costs and what kind of meters you think you need over the next 12 months?
So drilling costs for the surface is, because we've just had, we're going through a competitive tender process at the moment, you're seeing somewhere between around about €100 per meter for surface, sorry, for underground, and you're seeing about 80 €80 per meter for surface for diamond. All of that's for diamond. So actually, there's quite a narrow gap, or a narrower gap than we were quite first thought about between RC and drilling, RC and diamond, and between underground and surface. So it's a little bit more expensive than I think you're probably seeing in Australia, although I think rig availability is more problematic, and I think you're probably seeing drilling increasing, drilling costs rising. We have drill availability, and as of yesterday when I checked, we have confirmed that the crew who successfully drilled with us earlier in the year, these holes are available. Same rig, Atlas Copco rig, will be coming back in, and there with it, so we can get underground drilling with it in a proven way. The surface drilling crews, we have got 4 companies in tender, and all have confirmed a minimum of 2 rigs being available if we wish to have them. So rates comparable, availability is good, and we're good to go. Sorry, I think there was a second element to your question around in terms of how much meterage would we do.
Yes.
Kind of, again, it's a bit like, well, what kind of size resource do you want to define, and then how many meters do you need to drill to do that as a back calc? But the answer is we haven't defined a number. We're working with a competent person in every single drill hole that we design to make sure that everything can be included in a maiden resource. And the answer coming back to us right now is, off the back of this drilling, we could define a maiden resource. So if I wanted to answer your question, I could say 0 is the amount of drilling that I need to do, or I could say it could be another 5 to 10,000 meters.
How much cash are you sitting on, and what's your budget for the next 12 months?
So as you know, on the ASX, we report quarterly our cash balance, and we were just under $1 million for that. We the budget largely deflects. We've taken a pause. We can do our next drill campaign if we want to. That would be funded, or we can look to raise money. And like all juniors, we would need to raise money, obviously, to do a 5,000, 10,000 meter drill program. So I get the link. We have not been short of interest from market participants, let's put it like that, off the back of these drill results. So it's something that the board consider as the optimum time when and how we need to raise. And like all junior pre-production companies, in fact, many producers, you sometimes just got to top up the tin. And we're very comfortable with some of the levels of interest that we're receiving.
Does your property have any pre-existing royalties?
No.
Totally royalty clean.
Apart from the royalties which we pay to the state. So we don't have a legacy. We cleaned out there was one when we bought the project, and very early on I did a deal with Hispanibal, who are actually a shareholder, and they own the site. We bought back their option, and we cleaned out the royalty, and they currently own 4% of the company.
And would you guys consider selling a royalty as a way of financing the drill program?
I think it's one of those financing tools that has a place for every company. I just think we're probably too early. We haven't initiated those kind of conversations yet. So I'm open, and we'll do the right thing for the company at the right time. So the answer is yes, we would look at it at the right time. I just sense my experience having dealt with royalty companies previously on the banking side was that they probably want to see a project like this a little further advanced.
All right, right. Well, with that, let me turn it back to Campbell for additional questions and comments.
Sure. As we wrap up, I do have one more question. If you could summarize some of what we might expect some catalysts to be down the road, and any ones that might stand out more than others.
So very simply, it's making sure lightning doesn't strike once, twice. It's making sure lightning strikes 3, 4, 5 times, and that's the catalyst. It's getting the drill rigs back turning. Projects are being redesigned on the basis of drill success. We will be recommencing drilling shortly. As I said, rigs are available, and I'm hugely excited and grateful for the opportunity to tell folks that we've done exactly what we said we would. Sometimes the road's a little longer and a little windier than we would have liked, and COVID didn't help it, certainly at one stage. So we're there, we delivered, and we'll continue to deliver.
Great, thank you. Stu, Adam, if you don't have other questions, I think we'll wrap up.
Yeah, all good from my end.
All right. I'll hand it back to you, Stuart, for to close this. But I want to encourage everyone who attended live to please share his or her feedback. You'll get queued when you exit, and also you'll get an email. And for those of you who will be watching this on demand, there'll be please email us your feedback there too. Thank you very much, Stuart.
Just again, to reiterate my thanks to Amvest Capital. You're a great crew to work with. I really enjoy this, and the audience for participating. I'm very grateful when time is precious. And lastly, to say you have my contact details there. I very much have an open door policy. I get all sorts of weird and wonderful queries. I try and do my best to get back to everybody. So if you do want to engage, carry on the dialogue, please feel free to reach out.
Great. Thank you. Have a great day.
Thanks.
Everybody.